afternoon. Today is Friday and January the 6th, and time right now in Singapore is 1:08 in the afternoon. Okay. Today is going to be a key day. Today will be the first non-farm payroll for 2023. So the market do have expectation. Overnight we have the ADP, which is a private employment numbers, came in much more than expected. So that leaves the market a little bit jittery going forward into tonight's non-farm payroll, because a higher more jobs being created means the Federal Reserve higher interest rates is not destroying jobs, because for the Federal Reserve to get some kind of measure that they are succeeding in taming inflation, they need to cut demand, and by extension, if they can cut down the number of people being employed, people are actively engaged in the workforce, that means the demand cannot come down. So last night ADP numbers actually set the stage for a disappointment tonight going into the non-farm payroll, which is going to be due out at 9:30 p.m. Singapore time. And the market was expecting 200,000 new jobs. So if the number come up so much better than beyond 200,000 new jobs, then we can expect the market to react to the downside, especially the equity markets. Okay, so far the Dow Jones itself market did not have, is basically holding the line between 33,400 to 32,600. So between these two levels, the market probably will break out either to the upside or to the downside. So we will have to watch, because the market right now has, after reading through the minutes of the last FOMC meeting on Thursday morning, has come to the conclusion that the Federal Reserve is not going to ease off in the rate hike cycle. So that means it is a negative for stock market. So if the number come up for tonight's non-farm payroll is a lot better than market was anticipating, that give the market the conviction that going forward, the Federal Reserve will have to redouble its aggressive rate hike, maybe back to 75 basis points. Okay, so do watch out for tonight's explosive reaction in the market when the non-farm payroll is finally released at 9:30 p.m. Singapore time. Okay, so over in the S&P 500, we also see the market is just basically hanging on for dear life, not knowing exactly when where it will move. But I have basically placed an order to sell just above the 3,873, which is the high for so far this week. Okay, so if the market can go up to 3,893, I think that will be a great place to actually place a short, which I have already placed. So I'm just hoping the market will actually have a knee-jerk reaction to the upside and then come back down as cooler heads prevail. Okay, so we will have to see what the market entails. I'm also placing an order to sell just marginally above the 11,000 points in the Nasdaq 100, hoping for a knee-jerk reaction, ideally a three-wave rebound, no more higher than 11,300. So if this is the case, I think there is a good chance that we may get a knee-jerk reaction to the upside, and then as the hour progresses towards closing on Friday, then maybe the market can actually come back to its senses and decided that the number, whatever the number is probably going to be a bad numbers going forward. Okay, so we will have to watch how the market reacts tonight. But however, in Asia, we can see the Hang Seng market has been on steroid. It has been pumping the new high, particularly on an everyday basis. So far, the high is 21,000, almost 400 points. And of course, this Sunday, the border between mainland China and Hong Kong is going to open up. So this is one of the reasons why everybody is so bullish on the Hong Kong economy, thinking that the Chinese consumer is going to flood into Hong Kong and starts to stimulate the local economy. So that's the reason why the Hong Kong index, the Hang Seng index, has been so bullish of late. And technically, I think the market has the potential to actually challenge the June high, the last June high, which is at 22,450 points. Okay, so there is always a possibility based on the momentum that we have seen of late. Then, of course, the bullishness also spill over into mainland equity markets, and the Shanghai Composite right now is trading at 3,169, and it does look impulsive, because if this is a three-wave corrective rebound, it should not look like this. It should have ended somewhere below 3,140, but it keep on going, and there's every possibility over time it may actually challenge the December high, which is 3,225. Okay, so we have to watch this move as the market unfolds. Now over in the Nikkei, it's not so confident, because Nikkei up to yesterday was still testing the lower end of the range. This morning we have a bit of a bump up back to above 26,000, and the current high so far at midday is at 26,034. This is obviously a a different reaction on a different set of fundamentals. Over just before Christmas, we have seen the Bank of Japan actually broaden the yield cap, allowing the Japanese bond yield to actually fluctuate uh, beyond the previous 0.25 cap. Now it moves the cap up to 0.5. So effectively, this is 100% widening of the room for the yield to actually move higher. So that leaves the market to contemplate the possibility that for the first time in many years, the Bank of Japan is actually abandoning its negative interest rate regime, which is currently still being applied. Now, if you compare Japanese interest rate at negative 0.1, this is very different from the rest of the developed world, whereby interest rate has been climbing throughout the whole of 2022, whereas the Bank of Japan has been artificially capping interest rates from going higher because it simply cannot afford higher yield because the amount of debt accumulated over the years in Japan is so high. If interest rate is allowed to go higher, the cost of servicing this debt is going to be unbearable. So they have been trying very hard to cap this rate yield from going up, but I think it is a losing battle. The fact that they have widened the band is practically telling the world, I'm giving up, I'm throwing the towel. Now, the other thing is, of course, is a matter of legacy for Kuroda, which is the current governor of Japan, of Bank of Japan, and he's going to retire come April. So I think to guard his legacy, he definitely wants to return the monetary policy to a more even, more normal kind of situation. Ideally, bring back interest rate to above zero, or at the very least, bring it back to zero. Okay, so because he's handing over the reign to the next governor, so I think he has a few months left to actually tidy up, his legacy, so that when history look back into this guy and what he has done for the Japanese monetary system, at least he will go into the good books. Okay, so we will have to see. Okay, there's a lot of things playing on in Japan right now, but generally speaking, if we have higher interest rates in Japan, that means it's a negative for Japanese equity markets, and definitely this is setting the stage for lower prices going forward in 2023. Okay, so when we look at the currency market, we also saw the dollar versus the yen has rebounded back to 134, which is the highest so far this year, or at least we are only into the first week of trading. So from the low of 129.50, the market now is at 134. Okay, so this means that the market may actually test the previous peak just before the market went down into a low at 129. So we can see 134.50 is not very far away, barely about 50 pips away from where the market high was yesterday. So we will have to see whether this 134.5 can cap this run here. If it can, then maybe the entire structure of the dollar versus the yen has actually turned negative. So if this is the case, maybe we can see prices going downwards. Okay, but if it punch through 134.5 very convincingly, then obvious this is a totally different structure altogether. We will have to take another look at this when it happens. Okay, over in sterling versus the dollar, we can see that sterling has been continuing to lose ground. Yesterday it went below 131.19, and then it went out to 1.1873, and I think it's setting the stage for further losses going to 1.18. Okay, so this is actually my target here. There's a risk that market may actually momentarily go below 1.18 and then rebound. So do watch out. The potential for selling right now is no longer viable because the market has already moved. Downside has become very limited. So do not try to follow through on selling. Definitely this is not a market to buy yet. So watch out for further losses, and we want to see what the market reaction is as it comes closer to 1.18. Okay. Over in euro versus the dollar, we can see the euro has been losing ground very rapidly. First, in the middle of this week itself, we can see there's a massive sell down that took out the near-term support line, and I'm already short at 1.0678. And yesterday we saw a bounce back of 50% back to just under the support and resistance line, and I took another chance to sell it again at 1.0610. So now I have two short position, and the market went out to 105.15 as of last night, and it look like it's primed for further losses going forward. Intermediate target is 104, but I think 104 may not even hold. I'm expecting perhaps the market to go down all the way to 102.20, 102.40 levels. So I'm hoping that all this will pan out as what I anticipate. Okay. Over in Aussie, we can see the Aussie actually picks up at 0.6886, very close to the previous peak in December at 0.6893. So actually over here, I took out a short, and currently I have this morning I took out another short position because there was if you look into the 1 hour time frame, there was a 3-wave bounce. So I took the chance here to actually, this is a very aggressive move. I took another chance to go into average short. Okay, so you can see this leg over here. I shorted here again this morning, and the market looks like it's coming back down. So everything is looking great for me. So we will have to see if the market can actually go down a lot more. Okay, so I'm sitting pretty in currency right now. I'm not sitting very pretty in crude oil though. So okay, but currency seems to be I'm short euro dollar, I'm short Aussie dollars, and both are looking so far so good. We will have to see how it pans out. Now over in dollar versus Canadian, it may have given us a chance to sell the dollar going forward, but I did not take up this trade because I already short. I'm actually long the dollar, so I didn't want to short the dollar in dollar CAC, so I just leave it alone. But the market actually rebound 50% back to 1.3595. Okay, so this is within the bracket of prices in which I do expect some kind of re-emergence of selling pressure, and it did. Okay, so over in crude oil, like I said, I wasn't sitting very pretty in crude oil because the market fell down a lot deeper than I expected. Actually, I was already long at $76 as the market was going down to $72.46 last night. I was actually shitting brick. And then, but then again, this morning, late yesterday, about midday, it started to rebound. So hopefully I can see a rebound back to the 50% mark at just under $76. If this actually happened, I'll be counting my blessing. I mean, just actually cut my losses and call it a day, and then I'll wait for another chance. Okay. So over in the precious metal market, we see a very sharp pullback from 1,685, sorry, 1,865 to 1,824 last night, and this is a $40 collapse. I won't say collapse, a pullback. Okay, but this pullback is very aggressive, so much so that it took out a very minor support line here that give me the idea that maybe the bias is to the downside going forward. So I placed an order to sell at $1,845 thereabout, and if this one actually got filled, I think at the bare minimum, the market would test the lower support line. And if this support line punch through very aggressively, then I will have hope to believe that my original idea of the market unraveling all the way to 1,725 may be possible. So for the time being, I'm just going to see how the market reacts. First, I need to be able to short first. So in the melee tonight, when the non-farm payroll happens, and hopefully during that period of confusion, market may actually go up to 1,845 and give me a chance to anchor a short position. So once that is in, then I will obviously be looking at what the market would do near the support line here. Okay, anything beyond that will be actually a bonus. The other one, which is silver. Silver also saw a more determined pullback from $24.55 all the way to $23.12 last night. And then we have a very shallow rebound. So God forbid, do not sell this silver, because silver fundamental does seems to be a lot firmer than gold. So I would not want to sell this silver. Instead, I'll be just watching how far it can go down. And ideally, the lower it, the better. And so I'll take my cue from the gold market, okay, as to when I want to go back into buying silver. Now, between gold and silver, I have been very bullish on silver on a relative basis, because I think the supply condition in silver is a lot tighter than in gold. So I want to be able to see if I can get a position on the long side in silver and hold it for the long term. Okay. So the other thing is, of course, the pressure, the cryptocurrencies. This morning, we did not see very much after market went up to just under 17,000. Bitcoin, it has been drifting. And like I mentioned yesterday, the upside appears to be quite limited. At the very most, we can expect is a rush up to 17,100 to 17,300 levels. Okay, so I think the top side is pretty limited, and I think the risk is to the downside. Okay, whereas that is the case, I have actually taken out a short position in the Ethereum. As the market was rallying up, I actually went short at $1,245, and I placed another limit order to sell at the 1,265 level. So right now I have two short positions, one near the very top, and one is where the market is right now. I'm hoping the market can actually pull back to, at the very minimum, go back into this bracket of prices between 1,183 to 1,192 level. So if the market come back down, I may actually close out one of my position, ideally the one with the lowest entry price, and then hope that the market can actually drift lower to test this ideal target at $1,151. Okay, so this is my game plan going forward for Ethereum. Ripple seems to be pulling back, and the market has pulled back 38.2% from the low of almost 30 cents to a high of 35 cents. Now market is pulling back. So structurally speaking, it does look like the pullback is very corrective in nature. It does give rise to the idea that maybe the buyer is to the upside. So between this bracket of prices between 32 cents and 33 cents, I think the market may actually stabilize and give us a chance to actually position long, and top side is probably where the resistance line is. So you have to take it with a pinch of salt. I'm not going to do this trade because if I'm wrong, I'm going to place my stop below the most recent low at 0.2997, which is very far away from where I need to be. So it's from the risk reward perspective, this is not a good setup. So I'm going to give it a miss. Over in Binance Coin, again, the market is consolidating after hitting a high of $261. Again, this appears to be a three-wave rally, and at the very most we can expect is $271 to $280 top side. Okay. Now the one that actually moved is actually this one. Sorry, no, sorry, not this one. Okay, of course, Solana has been the star performer. The market has gone from $8 to $14 in a very short span of time. So it does look like structurally it is a buy. Okay, but the whole thing is that where are we going to buy? If we're going to buy, I would ideally want to do it between this bracket of prices between $11 and 19 cents to $11.91 if it happens. Okay, so unless the market pulls back to this kind of level, I'm not going to do anything on this particular point here. Okay, I was mentioning the one that actually stood out this morning is this particular coin called Tron. Now, I do not know the reason why Tron has been slammed down so hard when the other crypto markets is basically just holding water. So anyway, the market has come down very, very aggressively in a three-wave pullback, and it has hit my bracket of prices. Now, this bracket of prices is $4.43 to $4.58. This morning low is $4.58, essentially. So it has hit this ideal price of target in which it is no longer viable to continue to sell at lower price. Okay, so this market has technically hit its target. So let's see what happens. If this one ends up in a reversal bar here, then maybe this is actually a good market to go counter trend and go long instead of short. This is all I have for you for today. And do remember tonight at 9:30 p.m. Singapore time, there will be the non-farm payroll, and do stay up late and watch this move here because there's going to be a lot of fireworks. Okay, guys, this is all I have for you, and I'll see you again on Sunday during my Sunday weekly market rep. And if you want to attend, this is free. Do register and follow the registration link. Bye bye.